What is going on, investors? Hopefully, you guys had a wonderful day out there, and it is a big day on the stock market. Got a bunch of tech earnings, including Microsoft, which just reported their Q1 earnings after the bell today. We will take a look at them. We'll take a look at the different business segments. Microsoft's got a lot of things going on. Obviously, we think about them with their Windows products, Microsoft Excel, Word, those types of products, but they got a lot of other stuff, including Azure Cloud Services, LinkedIn, among other things. We'll take a look at the different business units and see how well these have been performing over the last year. Then we'll jump into these numbers, and these numbers are just fantastic. Okay, I'm not going to do any kind of spoiler alert. These numbers are incredible, and not only that, they're incredibly easy to understand. So if you're a little confused about balance sheets, profit and loss, cash flow statements, I actually think going through Microsoft today will really help you, okay, especially in the coming days when we look at far more complex statements like potentially maybe like an Amazon, which is far more complex, has a lot more going on. Microsoft is very clean, very simple, and I think you're going to be able to understand it. And as I walk you through it today, I think it's going to help you manage your other investments. Now, let's take a look at this from a technical perspective as well. We do this every week on the channel. If you're new to the channel, every Friday, we look at all the major FANG stocks, including Microsoft. This one had a hard rally, channeled sideways, and then is broke to all-time highs. We're looking for this one actually to head higher. We'll see if that is in the cards from a technical perspective. Now, speaking of higher, stock over the last year up, just 42%. Year to date, this thing's up 38%, and this thing's got a $2.3 trillion market cap. So when you're up that big, you are just driving profits, you're driving revenues, and things are just moving right in the right direction. The other thing I want to think about Microsoft is in the stock market right now, we're talking about inflation, we're talking about wage inflation, product shortages, supply chain issues. Think about Microsoft. I don't want to say they're kind of immune to a lot of that, but a lot of their products don't necessarily fall into a lot of that. They obviously have some wage inflation, lightly at some of the employees, but it's certainly not like a Amazon and certainly not like some other companies that we analyze. So Microsoft is very, very well positioned if you think inflation and supply chain issues are going to continue in the coming weeks, months, and maybe even potentially years ahead. A company like Microsoft could be a really good place to hide out, in my opinion, from an investment standpoint. Now, all things being considered, basically what we were expecting from Microsoft, okay, over $2 trillion company growing their top line revenue by just 21%. I say I'm joking, okay? That beat expectations by over $1 billion and $1.3 billion to be exact, giving us total revenues at $45 billion. I'll show you more of this here in a second. We'll take a look at that. All things being considered, all business lines outside of the Surface tablets and the Surface products absolutely firing on all cylinders. Here's all the Microsoft business units. The key ones are these top couple ones. Office Commercial up 18%, Office 365 Commercial up 23%, Office Consumer up 10%, and they actually increased prices. I think it was earlier last quarter. They increased prices by about $1 or $2, at least on the consumer side. I noticed my bill went up over at Microsoft. They were able to pass on price increases, and we still see the total revenues moving up and higher on those products. Now, the other thing that we take a look at is the Azure Cloud Services. Now, we're not just looking at this from a Microsoft lens, we're looking at this from Google and Amazon as well. Since I think if you're going to be invested in Microsoft, you probably should be invested in Amazon and Google as well. I think to round out your portfolio, where we're seeing 50% growth over on the cloud side, that is fantastic. Everything looking great here. Surface ticked down a little bit. You see, that's the only business that was actually in decline. 17% could be due to, first of all, you had such a hot PC market last year. People were working from home. They were upgrading. They don't necessarily need to do that again. I also know that during the last quarter or so, Microsoft released new versions of the Surface, and so it could be that consumers were potentially waiting for a new version. I'm not exactly sure on that one. Now, let's move on to the numbers. This is what we're absolutely certain about, that these are some of the best financials that you will see not only today, but pretty much all year. These are just absolutely fantastic. Now, we've got our 3 months ended here. This is the Q1 for Microsoft. We got last year's the right-hand column. The most recent 3 months is this left-hand column. We got our product side of the revenue went to $16.6 billion. That's up about $800 million where we were last year. On the service side, you're up to $28.7 billion. You were sitting at about 21.4 in the previous period. Just fantastic growth. So we've got that total revenue coming in at $45 billion. We were sitting at 37.1. Again, that was growth of 21% year over year. So when you're thinking about, oh, I want to put my money in high growth stocks, well, think about it. Microsoft's growing 21%. So if you're high growth, quote, high growth, high beta, high valuation stock that you're paying like a million times forward PE on, right now Microsoft's sitting at a forward PE of 34. We just did a video on Facebook, which grew its revenues even faster than Microsoft. They're sitting at like a 23 PE. So these high, quote, high growth stocks, well, I tell you what, they don't necessarily measure up to these mega cap FANG stocks. This is why we want to concentrate the vast majority of our portfolio in these stocks, because I just talked about their revenue growth. We're going to get down to profitability in a second, and it's even better. I mean, it's even better than the revenue growth. Okay, so we see our revenue growth went from 37 up to 45. Product cost, look, this is as good as it gets in the entire stock market. Take a look at this. Off this $16.6 billion in product revenue, it only cost us $3.792 billion. Even if these costs were as written, so say this is $16,000, and it only cost you $3,800 to get those costs, you have a heck of a small business. I mean, you are absolutely going to get filthy rich one day if this is your gross margins on any kind of product you're seeing, let alone a company like Microsoft. And not to mention, these figures are in millions, meaning this is $16 billion, and this is $3.8 billion in cost. Now, our services cost, take a look at this. It gets even better, guys. $9.9 billion in costs to make this $28 billion. I mean, this is just incredible. Okay, take a look. Over the last year, we went from $11 billion in product cost up to $13.6 billion. Okay, yeah, $13.6 billion is a lot of money. But when you balance that out, that it got you $45 billion. Yeah, $45 billion worth of revenue minus this 13.6 gets us to gross margin. Really, this is gross profit. Microsoft just listed as gross margin. CFOs have their liberty to call this whatever they want. I would call this gross profit. So you take this 45 and you minus off the 13.6 and you get to gross profit of $31.7 billion. Guys, there are almost no stocks in the stock market that are doing $30 billion of revenue in a year, okay? Let alone $31 billion worth of gross profit in a quarter. So Microsoft is doing more in gross profit in a quarter than almost every stock in the stock market does in an entire year, let alone potentially over a decade. Okay, so we see here our gross profits went from 26 billion up to this 31. Okay, that's over 5 billion, including, in fact, it's close to $5.5 billion more gross profit. Okay, and we grew our revenues by about 8 billion, a little over 8 billion on the top side. We added over 5 billion to the gross side. That just means this company is just printing money. This is like a printing press in the United States government where they're just constantly printing money. That's basically what Microsoft does. Now, here's the even more impressive. Look, those aren't our only costs. Those are only our costs to generate those product and service revenues. We've got research and development costs. We see those went from about 5 up to 5.6. No big deal. Again, we grew our revenues by over $8 billion. We've got selling and marketing. Here's probably the most impressive thing. Take a look at this. Again, we went from 37 billion up to 45 billion on our total revenue side. Take a look at our cost of sales, or our sales and marketing. We went from 4.2 up to 4.5. So we're talking just a fraction of a few $100 million in terms of increase on sales and marketing. So they grew their sales by 21%, and they grew their sales and marketing budget by like a fraction of a percent. It's unbelievable. And then we've got general administrative. That basically is flat. You went from 1.1 up to roughly 1.3. all things being considered, you come down to this operating income. So you take this 31, okay, that's our gross profit. Then you minus off research and development, you minus off sales and marketing, you minus off G&A, and then you get down to $20.2 billion on the operating side. And you might say, well, look, you've been highlighting numbers all over the place. I'm going to try to emphasize the importance of this. Okay, take a look at this. Okay, again, we went from 37 up to 45. That's about $8 billion. In fact, it's slightly over $8 billion more on that revenue side. Take a look at our operating income. Okay, we went from 15.8 up to 20.2. So nearly $5 billion of that $8 billion that we printed to the top line flowed all the way down, virtually down to net income. Okay, it's just absolutely impressive. This is what you look for when you look for absolute home run investments, okay? It's just like if you were to go to look in the NFL and look for a quarterback to invest in. You look for one with Super Bowl rings. You look for one with experience. You look for one with a track record of consistently doing it. Well, that's exactly what you're looking for when you're looking for an investment, and that's exactly what these numbers, these are basically the Tom Brady or the Tiger Woods of financials right here. You've got top line revenue growth, you've got cost under control, and you've got a ton of money when you have growth to that top line. A ton of that, in fact, the vast majority of it actually flows down to the profits. That's what you want as a common shareholder. Take a look at this. You went from $1.82 per share on earnings up to $2.71. I want to remind you that this company's dividend rate for the entire year, we're talking about for 4 quarters, is at $2.48. And the company just printed a quarter where they did $2.71. So do you think that Microsoft's got a little room to bump up that dividend, which they do every year? I think the last increase was by about 10 or 11%. They're going to bump that dividend up 10 or 11%. So think about that. You're going to get a raise on your dividend, a 10% raise or more in some cases, every single year for Microsoft. And if these numbers continue, which I don't think there's any reason to think these are going to slow down, you're probably going to get a 10% raise every year on your Microsoft shares. Think about that if you had your job. Think about if your job gave you a 10% raise for the next 10 years, how rich you would potentially be after that. And with Microsoft case, you don't have to wake up at 6 a.m. You don't have to clock in. You don't have to do any of that. They just give you the money for owning the shares. Absolutely phenomenal. Now, speaking of phenomenal, take a look at this balance sheet. Up at the top here, these are assets. And boy, we got some assets up here. We've got cash and some short-term investments, essentially cash. You've got, what is this, 130,000? No. Is this 130 million? No. This is $130 billion with a B. $130 billion with a B. Okay, we're sitting about there last June on this one as well. So all things being considered, the cash is basically neutral over at Microsoft. All things being considered, our total assets basically flat year over year. Total liabilities tick down a little bit. Now we do got a little bit of long-term debt on this one. Not too big of a deal. Okay, you got $50 billion worth of debt. Now that might be scary to some of you, but look, if you had $130 billion in your bank account, which is literally what Microsoft literally has $130 billion sitting in their bank account. And let's just say you had a $50 billion mortgage on maybe one house. It'd be a hell of a house, but maybe you had like 10 houses and you had a $50 billion mortgage. Would you really be concerned about that? Would the bank be concerned about that? Absolutely not. This is very, very manageable debt. They've got some up here on the short-term side as well. All things being considered, everything's looking great over at Microsoft from a balance sheet perspective. Now, from a cash flow perspective, you better believe when you print in $20 billion in net income. Last year, we're sitting at $13.9 billion worth of net income. You can imagine these cash flows are going to look really good as well. Net cash provided by our operating activities, $24 billion. A lot of companies will never do this in their lifetime. Microsoft just did that in a quarter. That is $24 billion in cash flow in a quarter. Annualize that out. Go ahead and times this by 4, okay? Because this is one quarter, okay? Times it by 4, and you're looking at nearly $100 billion worth of positive cash flow. Okay, this is why it's incredibly hard if you're a software company to compete against Microsoft, because this company has $100 billion worth of cash flow. We're not talking about $100 billion worth of revenue. We're talking about $100 billion worth of cash flow from operations. You try to compete against a business like that. Now, on top of that, they are repaying some debt, about $5 billion. They issued some common stock, likely to executives there, but they also are doing a share buyback. So we talked about how this company is paying a cash dividend per share. Here it is at $4.2 billion. Notice that it's higher than the previous year. This represents the increase in price that they are paying on the dividends per share, but they're also balancing that out a little bit by buying back shares so they don't have to pay a dividend on the shares that they buy back and retire. So it balances out a little bit. Net cash used in this financing, basically dividends and buybacks, $16 billion. So you got $24 billion worth of positive cash flow. You spent about $16 billion on share buybacks and repayments of some debt. So you're still positive after you do all that. And they've got some investing into their businesses, purchases of other companies. If you watch the FANG Stock recap show. So broadly, just really quick, before we get into the technical segment of Microsoft, what we want to talk about is this $130 billion worth of cash. How is Microsoft going to use it? You know, the federal government is not going to allow this company to do a massive software acquisitions. So what they're doing is a lot of smaller ones where they don't even have to announce how much the deal is worth. Usually, my guess is probably in the tens of millions of dollars. It's basically a rounding error when it comes to revenue and cash on hand. Microsoft is going to do a lot of small acquisitions, and we see that when we go through the press releases every week on Microsoft. Is virtually every week for the last 6 months, Microsoft has acquired a company or two, and we see evidence of that down here in the investment activities as well. All things being considered, this company's just looking absolutely fantastic. It doesn't get any better than this. And I'm not tooting Microsoft. My shares of Microsoft could go to zero. My children are still going to eat. I say this, and I'm not obviously sure as heck not getting paid for Microsoft to do this video. My only goal on this channel is to make you the absolute best investor in the world, not the best investor you can be. I think that's easy. You want to be one of the best investors in the entire world, and the way you do it is by investing in companies like this that print numbers like this, because these are companies that you want to own. Not only that, nobody wants to compete against a company that has financials like this. Good luck being in the software space and competing against a company that is printing numbers like that and has an absolutely blowout balance sheet. Now, we are seeing the stock head higher in the after hours. I think people are looking at the financials like I am. I'm going to put a line in right here at about $316 per share. That's where the stock is trading now. Earlier in the day, it was closer to about $310 per share. Now, on the FANG Stock recap show, we've talked about this stock breaking up above the previous highs of 305. If we broke up above 305, that is a signal that sellers have dried up, okay? Sellers just don't exist up here. Take a look at what's up here. Absolutely nothing with Microsoft. And we saw it with Google, which we'll do a video here on a second. Okay, Google, look, when Google broke above highs, I mean, this was like a year ago, look, this stock just ran and ran and ran and ran, okay? And so it's a very powerful thing when stocks break above all-time highs and then put a big old green candle, which it appears at the very moment, at least in the after-hour trades, Microsoft is looking to print a big green candle. This will be in red, unfortunately, but we'll put a big green candle tomorrow, and that'll put us well above the highs on Microsoft. Now, would I want to chase this one? Maybe from a trade perspective, absolutely. You could buy this one and just play the momentum. In fact, I know traders, this is what they dream of, okay? They play the momentum on these stocks, and they just ride the momentum up, and they set trailing stop losses. Now, on the way back down, okay, stocks have got to take a breather. You look at the stock chart of like a Facebook, this thing did the same thing. It broke above all-time highs and then took a breather. Eventually, we're going to see that with Google as well. Broke to all-time highs and it's kind of taken a sideways breather as well. We're fully expecting Microsoft to do that at some point, but look, how good those financials are. This thing could run, I think, up to the 330s, maybe even the 340s. We're just taking a guess a little bit, but we're also factoring the valuation as well. Okay, we're already paying 35 times forward PE on this one. Yes, we're seeing some growth on this one. I don't think a lot of people are buying this for the yield, but it is there. We've also got a $2.3 trillion market cap. So at some point, okay, the stock gets a little stretched from a lot of those situations, and sellers start to step in. Okay, you see sellers step in on Microsoft. The very bottom of the pullback will be 305. You get an opportunity in the coming days, weeks ahead to buy Microsoft at 305. Tell you what, that's probably where I'd want to step in as well. We'd also could see this one go sideways again. We'll point to Google here as well, because this stock is doing kind of the same thing. It broke to all-time highs, had a nice little run, and then it's kind of been chopping sideways ever since. So you could play either one, but I tell you what, when we go through these financials, we see that every single one of their business units is firing on all cylinders. These financials are absolutely fantastic. The competition is just in the dust. I mean, it's basically dust when you compare it to Microsoft, except some of their smaller things. Obviously, like an Xbox has huge competition. Their Azure and cloud services, huge competition, but their bread and butter business has absolutely no competition. And in an inflationary environment, what are companies going to want to do? They're going to want to drive productivity, because how do you fight inflation? You get more out of your workers that you're paying more, okay? I have to pay them more. How do I fight the inflation? I make them earn me more money. How do I get them to earn me more money? I can't make them work anymore. I can't make them work longer hours, but I can make them more productive. And Microsoft products can make employees more productive. I would expect businesses and consumers to invest more in the core products at Microsoft, because they help you run a productive business. Guys, that was Microsoft. It's absolutely beautiful over here. If you've been owning Microsoft shares like I have for a while, today's a great day. Sit back on your lawn, sip a lemonade, and take a break. Hopefully you guys enjoyed this video. Back again with more soon. Good luck with your investments.